Welcome everybody, VNV Global Capital Markets Day. We have welcome people in the room, and then there's a bunch of people also with us on video. Welcome to you too. We have I think a great schedule. This will be a very good opportunity to meet with many of our portfolio companies, also including some which you haven't met before, I think some of you at least haven't met before. I mean, so Voi and blah blah, it will be fantastic to have updates from here. There's some like Breadfast and Boka Direct. I don't think all of you have met them, so this will be a good opportunity to hear those stories told. This is how the schedule looks like. I'll do some introductory. I'll say something now, and then Voi, Breadfast, Boka Direct, short break, and then another couple companies, 3 companies, and then we'll have some drinks outside. So that's the afternoon. I think the schedule is as we have communicated it before. Unfortunately, Nico from BlaBlaCar had to be at the desk for some stuff that we're excited about, but we are also very excited that Piotr is here. Piotr has been with the company as long as we've been invested, and it'll be a great opportunity for you not only to hear Nico Bresson talk about this company, but to get a feel for some other people in this sort of very important company for us. Us lot, I mean, in case any of you don't know what we do, this sort of summarizes that. Network effects, of course, is the common denominator amongst all the companies in our portfolio. Network effects gets you to this wonderful winner takes everything kind of place where one can nearly sort of dream of the word monopoly, which is not good to say, but it's wonderful to own if we are honest with ourselves. That's what we look for. And a very important characteristic to have when you invest into companies with network effects or with the ambition to enjoy network effects is that you can be patient. So the presence of permanent capital is especially important when this is the focus area, in contrast to maybe e-commerce and other things where you can get revenues and maybe even profits going very quickly, but barriers to entry are low, so they can sort of disappear quickly. In network effects, barriers to entry are very high, but and wonderful when you are at that stage, but it can sometimes take a long time. So permanent capital is important. And us lot here, I think as throughout the years, we feel we have a capacity to take risk, but with a very, very sort of disciplined eye on the risk-reward ratio. It's okay to take a risk if the upside compensates for it. This is how the portfolio looked like, and there's been some changes. I'll come to them, but I think it's a familiar picture. Again, today you'll get an opportunity to meet a lot of these companies, which I think you will enjoy. I certainly will. What we've been active at over this past even year, I think it's fair to say, has been with a very sort of we've had a very disciplined, I think it's okay to say, eye on our debt maturing. Some debt is maturing this month, but also the bigger debt piece that we have outstanding is maturing in January 2025. So we've been hard at work in trying to monetize parts of the portfolio in order to sort of pay down the debt, so we go to zero debt, and we're happy about 2 transactions that we have done over this past year. This is the first one where we sold a portfolio of assets to Verdane here in Scandinavia, but really centered around Booksy, the Polish booking platform for the beauty industry. So that was sold for $52 million, which is a 12% discount in cash, and that has closed. We can get a little bit more. We can get up to $58 million if 2 earn-out pieces sort of fall into place. We feel very confident that one of them will, so we'll get some of that, and then the other one takes a little longer, so it's a little bit in the future. But if you count $58 million, we basically sold it at where we had it booked at NAV, which we feel is also, apart from raising cash, it's also important to to show that the marks we have that sum up to our NAV is good, and because we're increasingly frustrated that our share price values this NAV at a very large discount. It's come in a bit from this. This is the mark of that portfolio in our share price at the day when we announced this. So that was the first exit. The second exit is one which we have signed but not yet closed. So this is us selling Get. We own roughly half of Get. The whole company has been acquired by the parking app of Israel. It's a company called Pango. So they have agreed to buy Get for $83 million to us, of which $70 million comes on closing, and another $30 million gets paid out over a couple of years. So that extra payout is not, in contrast to the other transaction, which is contingent on some stuff happening at Booksy. This is not contingent on anything. It's a security for the indemnification that we provide to the buyer. That, for example, tax and legal matters are as we've said they are, and we feel very confident that that's all good. So we expect to receive the full 83, 71st, and then 13 over some time. Also, at an 11% discount to where we had Get marked in our NAV, and still a big difference to where our share price was pricing it, sort of roughly a 50% discount. Now, I think our stock came up a little bit on the back of this signing this transaction. I think when we sometime in later summer, I think it's fair to estimate that we'll also perform a closing. It's currently with the Israeli antitrust, and but it's not really a monopoly issue. This is the parking app buying the ride hailing, so it doesn't really alter competition, which is the big focus of any antitrust institution. So post selling Get, our portfolio will look like this. So Get has disappeared. BlaBlaCar becomes even more important, which we feel very good about. We love this company. It's the one company, I think, in the portfolio which is the most reminiscent of the holy grail of classifieds, where you get super high barriers to entry, very fragmented supply in a marketplace with a very fragmented demand. That's sort of checks the boxes of the potential of very, very sort of high barriers to entry and winner takes everything kind of model. I mean, we have that present in all our companies. We love all our companies, but in terms of sort of the one that's most reminiscent of that holy grail of classifieds, I think BlaBlaCar is that one, and it's roughly half the portfolio or the NAV after these transactions, and then there's also some cash now upon closing of Get, and then cash that comes in over the next couple of years as we get the rest of the payment for the Get transaction. So we were asked to include this. What this shows is our pro rata share of our top 10 portfolio companies, and so this is the revenue net to us, which has grown about 30% on an annual basis over these past years, and we're currently at about just under $200 million revenue to us. And if you also look on the earnings side of things, a little bit more than half is EBITDA positive. If you include Voi, that adds another 10%. And the reason why Voi is great is that we should really talk about EBIT. Voi owns and operates these scooters, does it super efficiently, but nevertheless, there's something that happens between EBITDA and EBIT, which makes this, this EBITDA positive, we expect it to be EBIT positive. But you get the picture that our portfolio has strong revenue growth, and on top of that also has an earnings profile. And that's really the ambition, if one is to sort of to end this intro on where our ambition lies and where we're heading, is to have these companies develop into not only profitable but cash flow positive, and ideally also in time they will be cash flow positive net to us. So we get to that situation where the big parts of our portfolio provides a dividend stream to us, which will allow us to pay our OpEx and not be stressed about that, but also eventually to have some cash to invest into new companies. This is how we had it back in 2018, the last year we had Avito. We're happy that Avito's gone now with all the stuff that's happening over there. But that last year, I think we had like $13 million of cash dividend to us, which would then pay for OpEx and also allow us to fund actually 2 Voice. So that if one is to talk about where we're heading right now, I feel that is very much the focus. And I think companies like ours, listed holding companies, do very well when it has sort of that kind of financial stability. So that's a very, very clear goal. And then, of course, there's stuff here that will, as BlaBlaCar at one point in time maybe leaves the portfolio. There's stuff here that will then come out of the shadows of BlaBlaCar, much in the same way that BlaBlaCar was in the shadows of Avito a few years ago. There are companies here which, when we have the Capital Markets Day next year or the 2 years after, will sort of have come out of the shadow and be the next BlaBlaCar. And then there's a bunch of stuff in this part which I'm very confident will first make it here, but then eventually make it here and become big players. I'm very confident that here there's stuff going on here that we see performing very well, and that will eventually sort of migrate to become something big like that. Anyway, that's all I had. I thought that was a good sort of backdrop for the afternoon. With that, I'd like to hand the microphone and stage to Fredrik.